Hi everyone, welcome to the Forex Form Guide, where we take a look at the major currency pairs each week through the lens of WD Gann analysis. I'm Aussie Dollarman. This channel is dedicated to the works and teachings of the great WD Gann. If you're new to the channel, I've put together some videos that you might find helpful. And if you do find value in this or any of my videos, I'd really appreciate it if you could click on the like button, leave a comment, and subscribe to the channel. It does help me to grow the channel and push out the works and teachings of Gann to more people. In this episode, we'll take a look at the Aussie dollar, US dollar, the pound, the euro, and the US dollar, Japanese yen. Before we do that, a quick disclaimer: this video is not financial advice. It's for educational and informational purposes only. Do your own research, trade responsibly. So we'll have a look at the Australian dollar, US dollar. And if you've been following the channel, you'll know that I like to do that by lining up my charts side by side, as Gann did on page 46 of his book, The Wall Street Stock Selector, which was the third book that he published after The Tunnel Through the Air and, of course, Truth of the Stock Tape. Before we do that, though, here's the chart and here's how I looked at it in last week's episode of the Forex Form Guide. I saw this. I said, we've broken a couple of tops. I think we're going to settle into a higher bottom and have more upside. Now, I was very, very wrong on that. And the market spent all week proving me very, very wrong on that, running down, cleaning out this low over here. Now, I could have glossed over that or not mentioned it, but I think it's important on your trading journey, wherever you're at, to be able to come to terms with a loss. Now, don't fall into the trap of joking about your losses and saying, oh, geez, I'm an idiot. Oh, that was a dumb call, and these sorts of things. It's really, really bad for your trading and obviously for your mental health. And it doesn't solve anything, and it ingrains bad thought processes into your mind. It's not going to bring you any joy. It's not going to bring you a lot of success either. On the flip side, I've heard people say you've got to learn to love your losses. I don't think anybody loves their losses and go, oh, great, another loss. I'm going to learn a lot from this. So you've got to find a happy medium between there. For me, over the years, one of my biggest challenges with trading is handling periods like this where the market is a mess and you're getting it wrong. And, you know, I've gotten it wrong a few times this year on the Australian dollar. Other times I've said, oh, gee, that's a mess. I'll leave it alone, like through some of this sideways stuff here. But in this area in particular, I have been fooled a couple of times by the market. And in those times, one of the key things that you need to learn as a trader is not to get caught up in trying to force the market to go your way or trying to be on every move and thinking, oh, well, this has happened, so I better go short. I'll stop and reverse and go long. I'll stop and reverse and go short again. There are times where stopping and reversing is a really useful strategy. In sideways markets, though, a stop and reverse strategy is a fast way to ripping up large chunks of capital. I was long out of this low here. I was happy with the trade. I thought that we were going up, and I got a break-even trade as the market came down, and then it's cleaned out that low, gone a little bit further there, had a bit of a rally on Friday night, but still looks as though it's probably going to set up a lower top there. Now, here's a piece of software that I use called Profit Source software. This is just overlaying a swing chart on top of the bars. Gann was a swing trader, although if you read a lot of people's Gann books and courses, you would never know it because people gloss over this stuff. They think it's too basic, but swing charts are a great way of identifying the trend of the market. In this case, you can see we had a higher top here, running down to a lower bottom, running up to a higher top, running down to a lower bottom. So it's a wild, uncertain trend in the market in a year that has been largely sideways, except for that spike up in April. And we had a couple of lows in January and February earlier in the year. So looking at this, what do I think? I think the market will start the week by going up. And then it's just a case of, do we get a lower top or are we going to shoot up and make a new high again? If you've been following the channel, you'll know that I'm looking for a big fall in the market in September, but that can be a big fall from an extreme high, or it can be a big fall from a first lower top, for example, on something like your weekly chart. If we look at our daily and our 4-hour charts side by side, here it is, obviously the run down, big run up, big run down, big run up. Well, with this big run down here, you can see why this low has come in here where it did. There's two things that I want to point out to you here. Number one are your sections of the market counts. This is from section 2 of How to Make Profits in Commodities. You can see we had a section down here. Gann says that markets tend to run in 3 sections, sometimes 4. So one section there, a second section down to here, and then a pullback there, which was roughly the same size pullback as that pullback after section 1. Then you've got this big run down here, and then you've got a larger pullback here, and then you've got a fourth and failed run down here. So number one, you've got 4 sections down, or it's most likely 4 sections down. Sometimes with sections of the market, or if you're an Elliott wave trader, it's not always easy to know as it's unfolding what the structure is 100%, but you can have a pretty good idea of it. Here, I would suggest that's 4 sections down, and then we had that massive up bar there when we got the employment figures on the US coming out at 10:30 p.m. Sydney time on Friday night. Now, 4 sections down suggests that that daily swing down there is over. It's probably the end of the 2-day swing chart as well, so I'd expect at least one more day up this week. However, this now becomes the first section up of this low here. So we're going to look at the second section, and if we get an expanding second section up, well, there's every chance that we'll get a third, maybe even a fourth section up there. With just this initial impulse, we've already touched the trend line from the top on the 4-hour chart down to the first lower top there. Now, if we break through there, that's a sign of strength for this move. And look, I think looking at this, a first lower top would be a reasonable thing to be looking at there. But given what the market is doing, it wouldn't surprise me if it does go higher. Personally, I'm looking around this area here to see what the market gives us and how long it takes to get there and what the pattern of the market is at that point. I'm not saying it must stop there, but I'm saying if and when we approach that level, I'll have a look at the second and maybe third section, see how they've broken down and see what my price forecasting work is telling me. At the end of the day, sometimes you'll get say a lower top here on the daily chart, but you won't call it in advance. But what you'll see is the market will give you 3 sections up here, then you get your overbalance and price down, and then a first lower top again on that 4-hour chart, and that'll be the area that you look to trade. For now, I'll wait and see what happens on Monday and Tuesday this week, but I do think that we'll be heading up in the early part of the week. If we look at the 4 charts side by side, the monthly and weekly up the top, and then the daily and the 4-hour down here, on the monthly chart, something very interesting happened last week, which is that we broke the low of last month's bar. So if we were to rally now, that would be a monthly higher bottom. But then if we were to fail a run up, and I'm not saying that we will run up, we'll talk about the weekly chart in a moment, but that could well be the top. But if we were to fail, then that becomes a bigger deal as a top there. So this top here, you've got an expanding run up compared to this area down here. And maybe that's just your first run out on the monthly chart. But since we've now broken that low, again, as I said, if we do go up this month, maybe next month, and then clean out those tops but have a weak move and fail somewhere, well, it becomes a bigger deal. And then what I'm looking for in September, which is a strong down move on the Australian dollar, and that's just based on Gann's law of vibration work from the tunnel through the air, but that would start to make a lot more sense with a failed monthly upswing there. Moving on to the weekly chart though, this is really interesting to see what happens this week because we've had a contracting weekly run up and then a strong run down here that took out a weekly swing bottom there. If we push through there and go a little bit further down, well, then there's every chance that late August, early September, where I'm looking for that strong down move, maybe that's just your first lower top on the weekly chart. And maybe that comes underneath this 50% milestone. We'll have to wait and see what happens with that. Now, at this point in time, we're a month out or so from that particular move that I'm watching for. I'm not too concerned about having to know exactly where that's going to come in right now. I do have my price levels that I'm watching, but we'll talk more about those as the move unfolds. For the time being, as I said, I think this is just a first range out here on the 4-hour chart. Let's see what the market has in it on Monday and Tuesday. And then obviously we'll revisit this next weekend. But given the patterns on the charts, I'm certainly not interested in loading up on long trades just at the moment. So as I said, I'll watch it Monday and Tuesday and see what happens here. And that 62.5% milestone is an area that I will be watching. So yes, a little bit messy at the moment, but we'll continue to follow this as we get closer and closer to that trade, which I think will be quite an exciting time on the Australian dollar. Let's move on now and take a look at the British pound. You can see we've had a down month on the pound as well. July finished off as an outside reversal bar there. We've just ducked down on Friday with a little low there and closed a little bit high there. That's only one day's data there. You can't make much out of that monthly bar there. Over here on the weekly chart, it's interesting. And I've left a few things on here for you to play around with if you wish to have a look at recreating what I've done here with some of this range work here. But looking at this weekly run down here, we've repeated that range into a 37.5% milestone there. That could be enough for this market to pause there, turn around and run up. And that 143 target is an area that I've been watching for a while on the pound. That could be enough there. But if we now go further down, now that we've had a little bit of a swing bottom and a rally from this 100% milestone here, if we get a bit of a rally and then we break that low there, there's a concept that Gann speaks about in the US Steel lesson where Gann says that tops and bottoms become halfway points in the market. So from this top here down to that low there, that's the halfway point down to 62.5% milestone there. And it would not surprise me at all on the pound if that's where this market is heading. A run down to 127 on the pound. Maybe there's a little bit of a rally first, maybe up to this trend line here, and then a run down to 127, then a run up to 143, and then a proper pullback. However, that's a few steps ahead. At the moment, all I'd be interested in is one step at a time and seeing what happens here. But if we come up and we fail around that trend line there, well, that 127.40-ish level is looking really good. And if you're looking for some hints in what I was doing with some of those ranges there, the work that I did there, I got that from Safety in the Markets Active Trader Program online training. That's the only Gann course outside of original Gann courses that I do actually recommend to traders. I was a student there at Safety in the Market for many years, and I did teach there for a little while as well. I'm not affiliated with them anymore, but I do still hold that course in very high esteem. Moving on to the euro now, similar to the pound there, we did have that run down. It actually has rebounded off this level. Firstly, it's only a 25% retracement here that we're dealing with, rather than 37.5%, and it has rebounded a little bit more strongly off there. So that euro target of 119 is still on the cards there. It looks a little bit messy to me as well, like the Australian dollar, an expanding range down here, but then a very strong run up here. So like the Aussie dollar, it's a little bit of a case of waiting and watching and seeing what happens on Monday and Tuesday to make a call on this one. But that looks to me a little bit more bullish than, say, the pound does. The final one that I'll run through is the US dollar Japanese yen. And you can see that 50% milestone and just a little bit through there that I mentioned last week, that has actually been hit. And I spoke about this. It was 2, 4, 6, 8, 10, 12, 14, 15 weekly bars down. And then 2, 4, 6, 8, 10, 12. Now we're 14 weekly bars up. And you can see nicely balanced there. Just run up through the 50% milestone. And then it's come down and closed right on its low there. And that run down there on the weekly chart, from the top of that weekly chart down to its closing right on its low there, that was all one swing on the 4-hour chart there. It was a big outside reversal bar here on the daily chart as well. That, to me, I think that's our monthly top on the US dollar yen, and I think that we're going down from there. And I've mentioned before that 114, 115 area over here, maybe 125, but I think that 115-ish level is the target that we're heading to on the US dollar Japanese yen. It's a shame that the US interest rates are a lot higher than the Japanese yen interest rate. So if you were to short this market, and that's not trading advice, but if you were to short this market, you'd be paying out interest every day on the trade, and not a huge amount, but a decent enough sum that it would start to get a little bit annoying after a while, especially on a monthly chart like this, where the move is going to take several months to unfold. But that, to me, looks like we might be finally at that stage where this market starts to head down. And if it doesn't, it's still just up to that trend line. I think it's not that far to go if it does have more to go. But I think we are finally ready to go down and break these triple bottoms here and then kick on. That's 1, 2, 3 bottoms at the same level. I didn't think that was going to hold. I still think that is going to be broken. Gann did say the fourth time a market reaches the same price level, it usually goes through, and that's what I think will happen there. And that's all for this video. If you did find some value in it, you might find some value in some of these other videos at the top of my channel here. And if you do have a moment, I would really appreciate it if you could just click the like button, leave a comment, and subscribe to the channel. It does help me to grow the channel, push Gann's message out to more people. So that's it for this week. I'll be back next Sunday with the Forex Form Guide. So until then, have a fantastic week. All the best with your trading, and bye for now.